Right, let's move on. It was one of the biggest banking scams in the history of the nation, one that caused India a loss of almost $1.8 billion. But late last evening, the chairman of India's regulatory bank, the RBI, was questioned by a parliamentary panel. The members of the body wanted to know how exactly such a massive scam could have been carried out right under the nose of the RBI. But the governor put up a defiant front. Urjit Patel told the parliamentary panel that the Reserve Bank has limited powers over public service banks. This isn't the first time that the chief of the RBI has expressed reservation over the lack of authority. Speaking at an event in Gujarat National Law University a couple of months ago, he had said that current legislation serve as protection for errant bankers. He also claimed that the RBI's authority over public sector banks was weakened because of clauses in the Banking Regulation Act. For instance, clause number 51 of the Act doesn't allow it to remove the chairman, directors or management of the PSU banks. The Reserve Bank of India can't force mergers between PSU banks. These banks also don't need a license from the RBI for conducting banking activity. Also, while there is a provision for having two people for the post of chairman and MD, the RBI cannot enforce this rule for public sector banks. In its submission to the parliamentary panel, the RBI said it has suggested amendments to the law to empower the central bank to exercise effective control over public sector banks as it did with private players on an ownership-neutral basis.